Hello everyone, welcome to the Ichimoku daily analysis for the SP 500 for Monday, October the 26th. Well, a change of trend today. The previous trend that was in force was an uptrend in the first time frame. The previous candle had a higher high and a higher low, and now we've had an immediate change of trend to the downside, and we flagged that there was potential for a change of trend. Today's candle has a lower high and a lower low, and it's another red-bodied candle, and a fairly large red-bodied candle, which means that the sellers have made some net bearish progress on the day. Now, interestingly, the market has traded very solidly down below the 1080 level that we identified as a previous resistance level, and was holding a support over the previous 3 or so days. The market has traded down there with a very bearish close, so that probably signals that the market will continue in this short-term time frame downtrend for probably at least another bar or so. Just looking at our Ichimoku indicators, the Kijun Sen and the Tenkan Sen have turned flat, and that reflects the lack of momentum in the market. The market is retracing this first time frame and second time frame upswing that the market's in, and there was congestion previously to the current candle, and that's what this is reflecting. It's reflecting that the market is moving back towards equilibrium. The market, when it was trending up here, it was moving away from equilibrium, and now is moving back towards equilibrium. And markets do that; they'll move from equilibrium to disequilibrium. And disequilibrium is basically what we call a trending phase. Equilibrium is a congesting phase. So now that we know that the market is moving into an equilibrium phase, we need to be prepared for the market to move into disequilibrium, and we know that the market will start trending in the direction fairly shortly, so we need to be ready for that. The Kijun Sen here, as we've noted on many occasions, that when it turns flat, it tends to be an attractor of price action, and that's exactly what's happened here over the last 4 or 5 trading days. The market's been attracted back down towards the Kijun Sen, and we should expect the Kijun Sen, which is at 1060, we should expect that to hold as a support level. So what we need to do is read the short-term dynamics of the market. When it reaches back towards there, we need to look at whether the bulls or the bears are in the ascendancy and determine how strong either side is, and that will give us a clue as to whether that area will hold, and perhaps give us a buying opportunity, or perhaps a short-term selling opportunity. Now, if the market does trade down through that level, we have potential support at the previous resistance area at 1044, which roughly coincides with the top of the cloud or the Kumo, so we should expect that area to hold up. We should also expect support anywhere through the Kumo, and we've got a lot of previous swing highs or swing lows, some at previous resistance levels, and some are support levels, a lot of levels through there where we should expect the market to find support. So there's very strong support all the way down, including the 1000 level, which is a long way below, and that should hold up as a potential area of support if the market continues to sell off. If the market does trade back up to the upside, then obviously the 1100 area, round number, which the market traded up to a few days ago or during last week, is an important area of resistance, and that region extends up to at least 1106, so we need a solid close up above there. But the market is fairly negative in the short-term time frame from the reading of the short-term dynamics. Just looking a bit more closely at the candle too, the market has opened at the midpoint level, traded up to the high and sold off fairly significantly, with the closing at the low telling us that the sellers were in control when the market closed, and they're showing some sort of commitment to taking this market lower. And there was some decent downside price rejection from above this 1080 level, as we can see from the tail on top of the body of the candle. It's a continuation of the keenness to the downside, the bearish keenness of the sellers from the previous day, and that was the sellers were fairly keen the previous day's trading, and today they're keen as well. So there's no change there. So we probably should expect this first time frame downtrend to continue. But as I said, keep an eye on the Kijun Sen, read the short-term dynamics of the market when it's interacting with the Kijun Sen, look for potential buying coming in for a potential area to go long. If not, then potential for the market to trade down to the cloud.